Good afternoon. I am Sensei Kevlar. On a long enough timeline, the survival rate for everyone drops to 0. It's a quote from one of my favorite movies, Fight Club. And I think it really does capture the lesson that I want to start with today. The lesson I want to start with today is one of diversification and the need for it. The way of the trader is one of staying in these markets long term. I've got in front of me a price quote from Bitcoin from back all the way going back to 2013 on Bitstamp. Now, if you notice something here, this is a market which has had a lot of volatility historically, but recently we've definitely seen a change in the trend on the upside right here. What we're looking at here is exponential growth. This is the point that every growth chart, when you're looking at bacteria or populations of an organism on an island, undergoes. In the beginning, you have your lag phase, and that just starts out really slow, and you've got sort of a sideways motion here, during which time you've got a small population that is growing steadily, and then you enter right here what is called the S curve. This is, or the bathtub curve. This is one side of the bathtub curve anyway. This is where the takeoff begins to happen. And once you start moving in this exponential rate continues on a logarithmic scale, logarithmic being exponential or geometric. Then, after some time, or it reaches a stationary phase, at which it levels out, finally there is a death or logarithmic decline afterwards. This is a chart of the number of bacteria in a population. It's also the chart of any market in history. It's the chart of any civilization in history. It's the chart of any population in a theater. As a movie begins, you get the people slowly trickling in, and then all the people come, and then the movie starts, and they all watch the movie, and then they all leave the theater. This pattern is repeated. This curve is happening over and over and over again everywhere you look. And on a long enough time frame, the survival rate of everything drops to 0. Where are you going to be when your survival rate drops to 0? Well, what I mean by that is what we're seeing right here is we're seeing the beginning of the S curve. Now, if you want a better way of looking at an exponential growth, you might do something like turn on this button right here, which changes our normal scale from normal increments of 500 every increment, 2,500, 3,000, 3,500, 4,000. You might change that to a log scale, in which every increment is exponentially larger than the last one. It goes 1, 2, 5, 10, 20, 50, 100, 200, 500, 1,000, 200, 2,000, 5,000, 10,000. Now, if you're looking at Bitcoin in this way, that S-curve isn't so visible anymore. And the reason that S-curve isn't so visible anymore is we are plotting a straight line along a logarithmic growth scale. That means that we are perfectly on schedule. If you take this trend line right here and you plot it along this motion right here, you can see that we should be arriving right at about the 2000 mark. According to our growth scale, we're actually ahead of schedule right now. And so these markets have the potential to come down. Why do I say they have the potential to come down? Because all markets come down long term. That is how these things happen. This is the growth pattern of every exchange in history. Starting with one of the most famous ones that I had the pleasure of being a part of, Mt. Gox, back in the days. Mt. Gox was famously created by someone who I have a lot of respect for and who I've worked closely with in the past, named Jed McCaleb. We worked on eDonkey 2000 projects together. He went on to create Overnet 1, Ripple Stellar, and other coins that I'm sure that you've heard of. In the beginning, he had, in the beginning he was just trying to create a Magic the Gathering online exchange in order to allow people to trade their Magic the Gathering cards. In the end, it quickly became one of the most famous Bitcoin exchanges that he sold, and then it went bankrupt after suspending trading and having all this Bitcoin missing from it. Very famous exchange. Lots of people lost their money. Most recently, the exact same thing happened with BTCE, where the growth chart looked on that one, instead of to be this, steady logarithmic decline, well, it was a straight line down. Because one day people just woke up and their money wasn't there anymore. Lots and lots of money moved through there. There was arrests in all of these things. Everybody who had their money up on BTCE no longer has that portion of their portfolio. My question to you is, where do you plan to be when the exchange gets hacked? Do you plan to have 100% of your portfolio on the exchange when the exchange goes away? And there's a key word that I said in there: planning. The way of the trader really boils down to planning. What we're doing is we're looking at this and we're saying, this is not a forever game. This is something that we have to plan for long term. If we are here in the process, we could be right here in the process, and we very much need to plan long term. But planning long term also means planning for this right here. Without planning for the decline, you are not planning for your opportunity correctly. What you're doing is you're taking a risk. You're not planning for this to go away at some point. So when I talk about diversification and it being a part of the way of the trader, it being a crucial part of the trading strategy, and when I talk about not trading, well, these go hand in hand. So the first thing that I asked you to do is learn how to not trade. And some of you took this really seriously. And if you did, you should really be congratulating yourself at this point. You have absolutely overcome the emotion that has driven you to lose your money every time the market went down on you. It is emotion that causes you to sell because you don't have a plan. If you had a plan in place, you wouldn't need to sell at a loss. You would know how to make yourself profitable in accordance with your plan. This is the way of the trader. To plan for profitability is to plan for your downside. To go into a situation and say, I recognize that this is a situation that I could be really wrong about. I could absolutely have this go away from me, and then my money would be no good anymore. I would have lost my purchasing power. If the exchange gets hacked, then you lose all of your purchasing power. Well, how much purchasing power do you plan to lose? My answer is, when I'm working with my trading portfolio, is I'm trying to keep my allocation on any one given exchange under 20%. Let me say that again. I have less than 20% of my trading portfolio allocated to an exchange. The other 80% of my blockfolio, my crypto portfolio, is allocated to making me money in other ways. Be that on another exchange, be that through staking, be that through, different, lending. So I'm just going to go over some of those options right now, as far as the way in which that we can diversify our blockfolio away from trading. And this can, in turn, be a source of passive income that feeds into our portfolio. So before I go into more of the technical explanation about what some of those options are, I want to just take a step back for a minute and refocus on that portfolio size aspect for a minute. Because we're trying to do this with our portfolio. This is the goal. We're trying to take this situation right here, where we have money and it's doing nothing for us. We're just sitting here on our assets. That's where we are right now. We're sitting on our hands. And hopefully, those who have stopped trading realize that this is where they are. And this is where they're about to be. Those who have not stopped trading yet, well, you could still be here. You could be somewhere in here. You could be somewhere in here. Without a plan, you don't know. But with a plan, now you know. This is where you're at. We are here with our plan. Now, what's the number one way to get us to do this with our portfolio in a safe, sane manner? The easiest way to do it, the easiest way to increase your portfolio is to get out your wallet. You just get out your wallet and you buy Bitcoin. You buy Bitcoin here, and you buy Bitcoin here, and you buy Bitcoin here. And you do it every 2 weeks, every month, as soon as your paycheck comes. You go and you don't look at the price. You do it with a blindfold on. You just go and you take your allotment. If it's $50, you go buy $50 of Bitcoin every single time your paycheck comes. At the end, at the end of a week before your next paycheck, you realize that you've got, some extra spare cash and that you can spare some more cash to go into your portfolio. You get out your wallet because Bitcoin just came crashing down, and now it's a better time to buy, and you can get in at a better price down here at the bottom of the market. And you get out your wallet and you invest in yourself. This is the way of the trader. This is about how to make wealth for yourself, is you invest in yourself. That's what we're really talking about here. Diversification is a form of investing where you are investing in your long-term future. You are planning to stay in this game long after the market has done one of these. You are planning to make all of your money here and then be entering a new market long before this starts to happen. That's diversification. Diversification is not something that you do once. It's something that you do continuously. Every 2 weeks when I make a bunch of money on my trading portfolio through my trades, at the end of that, I look at how much money I make, I split that money in half, and I take it off the exchange no matter what. And then if I build up and build up and build up enough money on the exchange, I'll just find more ways to diversify that. And every time that I get a paycheck and I have extra money sitting in my bank account and it's not doing me anything, it's sitting here and it's forever going to be on this part of the growth phase for me. Well, I'm going to get out my wallet and I'm going to put it into the market right here, or 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 right here. And I'll tell you the reason why. Is because if you're not looking at this chart and you're not kicking yourself for having not bought this back here, and then bought more of it 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 here, if you're looking at this and saying, well, it was too high to buy here, well, where is it today? My answer is you're wrong. It's never too high to buy. It's never too late to get out your wallet and start investing in yourself. This is a critical part of the strategy, and if you aren't doing it, nobody else is going to. Get out your wallet and invest in yourself, and don't put it all up on the exchange. Put it into wallets. Keep them on your computer. Get on YouTube videos and learn how to export your keys and put them onto paper wallets. Staking is a process by which you have coins. I'm just going to pull over a wallet right here. I've got some BitConnect token in a wallet right here. Right now, if I move my mouse over here, it says that I'm staking. Well, what does staking means? What does staking mean? It means that in securing the blockchain, we have to do proof of work. And one of the ways in which we can do proof of work is to have an ASIC or a GPU or whatever sitting here running, and generating heat waste in order to prove that we're generating heat waste. And we call that proof of work. Well, another way of proving that we have, done the requisite work required in order to verify the blockchain is to hold coins in our wallet. The act of holding coins in our wallet, you can see I've got some coins that I'm holding in my wallet here, allows us to mine the blockchain and secure it without generating excessive heat waste. This is a form of compound interest. This is a way in which our money can grow on our money. Okay? What I'm doing is I'm sitting here and I'm saying, well, I've got so much Bitcoin or BitConnect token, and it's going to sit here and make me so much BitConnect token just by sitting here in my wallet, just by sitting on it. Without trading, I am increasing my assets over time. And the value of my assets are increasing over time. This is multiplication. This is a form of compound interest. And compound interest is a critical tool in the way of the trader. This is my favorite site in the whole world. It's called Compound Daily, and I do it daily, and I recommend that you do too. Let's just say that I have a $15,000 portfolio. And I figure out how to, stake and trade and lend and invest in all these different sites, and I get my daily interest rate up to 1% a day. I buy hashing contracts, and every single day that I take profits from my trading portfolio, every single day that I take money from my hashing contracts, every single day that I take make staking coins, these are being reinvested towards staking. I take my money out of my hashing contracts and I buy hashing contracts. I take my money out of leave my money in my some of my money in my trading portfolio, and I create more buying potential with it. I get my wallet out and I add to my portfolio every opportunity I have. That's how I got a sizable portfolio. Is I started with an itty bitty portfolio, and I got out my wallet over and over and over again, without fail. Every 2 weeks, as soon as my paycheck hit the bank, I was buying Bitcoins. And at first, all I had was a couple hundred Bitcoins. A couple hundred dollars in Bitcoins. And Bitcoins had already gotten away from me because I already gotten in and out of the market many times. And I realized that I made the mistake of selling my Bitcoins. Meanwhile, my dollars weren't doing me anything, and yet I had traded them out for dollars. Well, what I should have done is I should have kept my $1,500, which is what I eventually worked my way up to over a 6-month period. Just sitting here putting $250, $300, $400, $500 into my portfolio every single 2 months, month after month after month, until I made it to the $1,500 mark. That's when I was able to start actually moving my portfolio in a positive direction using my trading. People ask me this all the time. Do you need this much money to trade? No, of course not. It's just that you're going to be very limited in the number of opportunities that you can invest in. $1,500 for me was sort of the magic number because this is the point at which I could really experiment with some different capital. But I've seen people do it with a whole lot less. I've seen people do it with $250. It just takes them longer. And what I tell them is, you got $250 in your portfolio? Great. Get out your wallet and get out $250. Well, look it. You just doubled your portfolio overnight. That was brilliant. Let's do it again. Do 250 more and 250 more over the next 2 weeks. Well, you just doubled your portfolio again. Well, if we could just sit here and do this time after time, creating wealth for ourselves at a rate of 1% a day, if we could just sprint to the $1,500 mark on our wallets and then really start to move our portfolios along, look at what can happen when we start taking out 1% of a $1,500 portfolio on a daily basis. Every single day we're making $150. Every single day we're reinvesting that. We're putting it back towards staking, back towards hashing contracts, and it's going back towards our total principal. Every single day we're doing that. Every single day it's going back towards our total principal. Well, here we are at day 90. We started with a $1,500 portfolio. We're already at $36,000. We've more than doubled our portfolio at this point. Okay, let's take it out to day 120. We just turned $15,000 into $50,000 in a 4-month time span. Let's keep going. Here's day 150. We're at 66,000. Here's day 180. We're at 89,000. By day 191, we break the 3-digit mark. Now, let's just take this number right here. It hasn't even been a year yet, but through steady diversification, through steady trading, through steady no-loss strategies, we have very, very slowly built up our portfolio. And I want to call your attention to this. This is not 200%, which is what these markets can do. This is not 2,000%, which is what these markets can do. This is not 22,000%, which is what these markets can do. This is 1%. This is 1% averaged over 240 days, 190 days to get to the 100,000 mark. Well, we know that these markets do that weekly, let alone, over a couple of months. Now let's take a look at what happens when we start at the $100,000 mark. We're already half a year into our venture, roughly, a little over half a year, let's say, 190 days. And we're going to plug in our $100,000 portfolio into this equation. Let's just skip on down and get to the exciting part, where we reach the following number. 111 days after that, we're basically approaching the end of the year here. You've now turned $15,000, which you sat there and created by just getting out your wallet, $200 here, $100 here, just put it in. Just put it in. Don't look at the price. Do it with the blindfold on if you have to. If you get emotional about how high it's gone or how low it's gone, put a blindfold on and buy Bitcoin and put it into your portfolio and start diversifying your opportunities. Right here, we reach the magic number of $300,000 in our portfolio, because at the point at which we are at $300,000 in our portfolio, if we're doing 1% a day on that, right there, well, $300,000, $3,000, which is what we're making every single day on our portfolio, times 365 days in a year, well, that's $1 million. You are literally a millionaire every single year because you sat here and you worked 1% a day and you reinvested. This is a critical part of the mindset. You will not get rich fast by taking risks. You will get rich very, very, very quickly comparatively by using low-risk strategies, by keeping yourself in the market when the market is doing this. The way to keep yourself in the market when the market is doing this is to not be in the market. And that means to have your assets not in the market. Well, if the market is going to do this, and we know that the market is going to do this on us, and we know for a fact that, Bitcoin has the potential to do this, and everything has the potential to do this. Everything has the potential to do this. Every market over enough time frame. If you create upside potential, right here, you're creating downside potential on the other side of that in every single market. It can come all the way down to here for all that it matters. You need to be prepared for this. And this is what no-loss strategies are about. No-loss strategies keep you from losing. They keep you in the market even when this thing goes to zero. Even when Bitcoin disappears. Even when crypto disappears. And that's the point I really want to make here. Don't just diversify into crypto. Diversify into everything. Hold traditional assets, gold, silver, commodities. Hold, foreign currencies. I'm not saying that you should invest in the stock market. I'm saying you should be selective with your investments, but you should diversify those investments. They should not all be in one market. They should not all be in one place. The more risk that you take, the less money you can make. Everything is going to be a risk-reward comparison. And if you are not making the right calculation, if you are not measuring the risk correctly, you're not doing this correctly. You're not going to stay in the game when this occurs. And this will occur. Don't be fooled. Don't be fooled into thinking that this can't go back to here. It can. And it has before. It did it here. It did it here. It did it every other time. So, diversify. Think about how your portfolio will perform long term when your exchange disappears. Plan not to lose. Plan for your opportunity generation. Make sure that you are staying in this game long term and that you are making plans to opportunize on these opportunities correctly. Because if you're targeting something like this, you're not being very realistic. You're not really looking at your opportunities correctly and going, well, that's the type of risk that I can afford. Well, sure it is. If you've got $300 million to throw at things, then yeah, you can, throw $100,000. And people ask me all the time, how long is it going to be until I'm able to start trading professionally and doing this for a living? And I say, well, you got a job? Get out your wallet, keep it, and get out your wallet. When you have a large enough portfolio that you're sitting here doing this and it's making you a ton of cash, now you know. Plan. Sit here and figure out, okay, if I've got a job and it pays me X amount of cash, then I can afford to put, then I can afford to put X minus this amount of cash in my portfolio every month because I've got bills to pay and I've got a, family to feed and gas to put in the car and everything, and I got to keep my job. I got to keep going. I have to keep going even when the markets are turning down on me. I have to keep putting in. I have to make that plan to get out my wallet and put money in. And make that plan for yourself. Make that plan around, something realistic, something that you can actually afford, something that you can sprint to, something that you can make a plan and stick to the plan with. Because if the plan isn't realistic, well, you're just going to get a month into the plan and go, ah, crap, I need the money for something else. Well, that isn't good planning. And that's not how we plan for profitability. You see, planning for profitability is making sure that you're not using emotions to make your decisions. And that's what I'm going to be teaching you in the weeks to come as we explore more of the way of the trader, starting this coming Monday. But I need you to be in the proper mindset, which is that the way of the trader means you're not losing money. You're making it, no matter what. It does not matter if the market is going down on you, you're still building the amount of assets that you have in your portfolio. And the amount of assets that you have in your portfolio will ultimately pay off long term when this market does turn around again and continue on its exponential growth path. The price of Bitcoin has doubled on average every 8 months. It forms a straight line right across from here. Yes, of course, you had months where it didn't perform in that way. But on average, if you were to just take this trend line, every 8 months that trend line doubles. If you don't think that you can get into the market right here, well, you're wrong. Because you can get into the market right here, and down here, and down here, and down here, and down here. And just do that over and over and over and over and over again with your wallet. And make a ton of money when the market turns back around on you. And that is the way of the trader. Thank you very much.